The gold market in India. Just 2 months ago, I made a short video on gold prices and made an estimation of how gold could reach 60,000 by the year's end. Back then, we weren't aware of the bond market based financial crisis that's going around. Obviously, it was a humble estimation. Within 2 months, gold has already breached rupees 60,000 barrier. How did this happen? Hello everyone, I'm Rakshit Pai, and in this video, I'll answer your questions. Why is gold rising? Where could the price go? And should we invest in gold? So let's get started. The economics of gold and silver market. Before investing in an asset, you must understand its behavior. In a sense, it is to study the economics of the asset. And gold and silver pretty much follow the same path. So how is the value of gold determined? The price of gold is tied to its physical assets, i.e. the gold metal itself. Basic economics say that when the demand for a commodity rises with supply low, the price will definitely rise. Gold mined throughout the world is sent to the central banks of large nations such as the US Fed, the Bank of England, Russia, China and India. These large banks then come together to decide on the price of gold. You can invest in gold via gold jar account. It is the easiest way to invest in gold. You can invest with as little as 1 rupees. Check the link in the description for more information. Why is gold rising? Historically speaking, gold has performed better when the economy is struggling. Basically, gold goes up when the economy falls into recession. And there is a logic behind this. Usually, when the economy is doing well, you invest in equity or sometimes bond market. And when the economy isn't doing well, many withdraw their investments from the equity market, but then they must invest somewhere else, right? Because cash is trash. So where do they invest? They invest in an asset that has a negative correlation with equity. Because here, if equity is falling because the economy isn't doing well, we must invest in an asset that goes up, that is gold and silver. We have seen the same pattern over and over again, wherein as soon as the equity market falls, the demand for bonds and gold rises. But this time it was slightly different. With the Fed raising interest rates, the bond prices declined, and we all know how that turned out. Watch this video to learn more about the SVB financial crisis. Anyway, with rising interest rates, even the bonds seem unfavorable because you may get good interest rates, but the price of the bond is falling. So when the two best asset classes, that is the equity and bond market, are falling or out of the picture, you have nowhere else to go but the gold market. Among the 7 prominent asset classes, gold is the most preferred option during times of economic distress. Hence, it is a wonderful hedge against your equity portfolio. So as usual, people flock to buy gold and silver. Where could the price go? In order to have an estimation of the prices, we must first understand the factors that affect gold price. Number 1, socio-cultural factors. Especially here in India, the demand for gold is more of an emotional concept than an investment one. Hence, India is the second largest gold jewelry market next to China. And over 50% of our annual gold demand is in regards to wedding and such other occasions, basically jewelry. Number 2, economic factors. As said earlier, whenever there is an economic downturn, the price of gold will go up. Similarly, when the economy is doing well and the stock market is seen as a favorable investment option by many, in that case, the demand for gold will fall and price will follow. But no matter what the reason for economic downturn is, history shows that gold will rise when other asset classes are falling. Hence, we call it a negatively correlated asset. Number 3, currency factors. Before the Bretton Woods agreement in 1970s, the US dollar was backed by the actual physical gold, and all other countries' currencies were pegged to the US dollars. So after the agreement, now there's not a single currency pegged to gold. But since the gold price throughout the planet is the same, whenever the dollar value rises relative to other currencies, the price of gold will fall and vice versa. The dollar's rise means the rupee value depreciating. Whenever you buy gold, it is first converted to its dollar value, then to its INR value. So the fall in rupee value means your gold price will rise. So what's the future for gold price? Gold should not be purchased for short-term investing. Your gold jewelry is not an investment, so that aside, gold must always be purchased for the long term. In this case, for at least 7 to 10 years or one market cycle. So when investing in products such as gold ETFs, sovereign gold bonds, or even gold bullion, the bar and coins are considered. Invest such that you will hold on to them for at least 5 to 7 years and over. Basically, invest in gold when we are in a bull market or when the stock prices are rising, and sell when we are at the bottom of the stock market crash. It is not easy to determine the exact situation or timing, but that's the best way to go. Should we invest in gold? If your investment is mostly in equity, then do consider holding at least 10% in gold and silver. Take the current market situation as an example. If you had invested entirely in equity, you are down as much as the market is, maybe more. But as you see, the same period, gold has risen. So if you had invested 10% in gold with a 10% hike in gold price, your net portfolio would be up by at least 1%. So invest in gold, keeping the next bear market in mind. Invest for the long term. The best way to build a perfect portfolio is by investing via ET Money Genius. With ET Money Genius, you can find the best mutual funds, check the health of your portfolio, get recommendations, and enjoy all other benefits with just 49 rupees for 3 months. For more information, check the link in the description. Conclusion: gold has been safe haven for centuries. This fact will not change anytime soon. In fact, as long as there are people who value gold for its metal, the demand for gold will always be there. With that said, we thought that Bitcoin or other cryptocurrencies could replace what gold did until now. Many believed that cryptocurrencies could become a safe haven for savers and investors. We were obviously wrong. There's no alternate for gold than that of gold itself. What I mean is, until now, we were investing in gold metal, but as we progress, the demand for gold instruments such as gold ETFs and SGB is very much alive. I personally invest in gold metal, save the metal in bank lockers, but the best way to invest in gold is via the SGB. For better liquidity, consider investing via gold ETF. I hope that answers your questions. For more information, check the link in the description. Thank you for watching.